I want to bring in Brian Westbury, First Trust Advisors Chief Economist, also Independent Women's Forum Policy Director Hadley Heath Manning, to get their thoughts. Brian, I want to start with you. I always call you Mr. Rose-colored glasses. You're my kind of guy. But when the market's down 300 points and it's been a rough couple of weeks, people are starting to get concerned here.
Yeah, Charles, I think the market is volatile, but the economy is just fine. And, all these people want to look at, if we go back, the debt ceiling debate, the fiscal cliffs, just think about how many recessions have been called in the last 10 years. And now it's this trade issue with China. But we don't face the Smoot-Hawley Tariff Act. That was a tariff on the whole wide world of 30%. This is one country, and already companies are leaving China to produce in other countries so they can avoid those tariffs. That's why prices aren't going up for U.S. consumers, and more companies are going to leave China. So I think the danger to the U.S. economy is way less than people think. And what we're seeing in the market is just it's volatility, and people get scared, and there's a reason, and then the machines start selling, but we, every time we've done this, we've bounced back because the economy has stayed resilient, and I think it still will this time.
And to that point, Hadley, I should point out that Goldman CEO David Solomon was on television this morning. He says the economy is doing fine and that a recession is not on the horizon. They did change their fourth quarter numbers. They lowered that. And I think the media has sort of taken this and we're seeing the recession thing. But it reminds me of December when almost every day the headlines were recession. It did actually spook consumers. Consumers' incomes went up through the roof that month, but their spending fell precipitously, and their savings rate had one of the biggest month-over-month jumps I've ever seen. So could we actually be talked into a recession at this point?
Yeah, so much of the market is psychological, and so much of our politics is psychological. When we look at sort of the potential of a trade war, the way that might weigh on our economy, the potential of a recession, that's in one corner. In the other corner, we have all these factors that are in our favor as the U.S. economy when it comes to wages going up, when it comes to the fundamentals of our economy continuing to be very strong, in large part due to the good economic policy pursued by the Trump administration domestically through deregulation and through the tax reform package resulting in huge tax cuts.
Right.
So now is really the time to be addressing some of the problems that we've had in our trade relationship with China for decades. It's not a fun business. Nobody wants a trade war. Nobody wants conflict with China. But when there are, trade partners of the U.S. who are acting, not in good faith, and they're doing, abuses of our intellectual property, and not to mention that China is a national security threat. We have to face the facts that our technology that we use in the United States, we don't want to put ourselves in a position as a country where we're depending on China for things that affect our national security, and voters understand that. So if we do see an impact on consumers, a lot of them, in terms of being voters, are going to weigh that against their political feelings about China and really the long-run relationship that we have with them and our national safety and security.
Those are fantastic points. In fact, Brian, there was a op-ed in the Washington Post saying that a recession could derail President Trump's reelection efforts. And I got to tell you, here's the interesting thing. If we've gotten to the point of being so impotent with our relationship with China that we can't fight back, that's the worst news out there. That's much worse than anything else. If we have gone beyond the point where we can actually push back and demand a fair relationship with China, I think that's scary.
I totally agree, Charles, and I'll agree with Hadley, too. We have tax cuts. We have deregulation. The one thing we don't have is spending reduction. Government spending continues to grow faster than GDP, and that really worries me in the long run. But right now, real GDP has picked up. If you look at the last 10 quarters of economic growth in the U.S., of business investment in the U.S., it's stronger than it was in the previous 4 years. And so, and President Bush, President Obama, neither one of them went after China, and President Trump is, and it is time. And we don't want to go to war. We really only have one tool, and that is these tariffs. And I guarantee you, all we have to do is look at dozens and dozens of companies moving out of China exports from China going down, exports from Vietnam and Taiwan and Mexico going up. They're hurting. China is hurting over this, and we have more leverage today than we've ever had.
I got less than a minute, Hadley, but I do want to quickly ask you the role of the Fed, because I'm more concerned about miscues right now from the Federal Reserve than anything else.
Oh, yeah, I mentioned psychology and politics, and that's certainly something that comes into play with the Fed, just like it does with our trade policy. So American consumers, we've just got to be prepared for anything ultimately, but know that the fundamentals of our economy are strong, and I hope that the Fed pays attention to that as well.
All right, Brian, Hadley, you are two of the best. I appreciate you helping us on a day when the Dow's off 300 points. Thank you.